Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis welcoming you to my podcast Money Talk for Tuesday the 9th of May. And as well as finding us on Substack, you can also listen to us on iTunes, Spotify and Google Podcasts. And you can find out the details of how to find the show on your favourite smartphone app by going to my Facebook page, Peter Lewis Money Talk. Or you can also take a look at my website, peterlewismoneytalk.substack.com. And there you'll also find a lot of information on today's business and finance stories in my daily newsletter. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, the Fed's quarterly survey of senior loan officers showed US banks plan to raise their lending standards, adding to fears about a looming credit crunch for the US economy. For loans to businesses, survey respondents reported tighter standards and weaker demand for all loan types. And in its semi-annual financial stability report on Monday, the Fed warned that the recent banking turmoil could stoke a broad credit crunch and slow the US economy. Taiwanese exports fell for the 8th straight month due to weak global demand. Exports from Taiwan dropped 13.3% year-on-year, but moderated from a 19.1% plunge in the previous month. Taiwan's economy is trade-orientated and exports account for about 70% of Taiwan's $800 billion economy. Shipments of electronics make up about a third of the total, and in April exports of electronic products fell 8.6%. Exports decreased the most to China and Hong Kong, which is Taiwan's largest market, dropping 22%, and exports to the USA fell 10.3%. Japan's service sector expanded at a record pace in April. The All-Japan Bank Japan Services PMI was revised upwards to a record high of 55.4 last month, above March's figure of 54.9. The latest reading marked the 8th straight month of expansion in the service sector, with new orders growing the most in over 15 years, amid greater spending on travel, leisure and tourism. And China on Monday said state security services had raided multiple offices of international consultancy firm Capvision, accusing it of ignoring national security risks and passing on sensitive information abroad. State media said authorities questioned employees and inspected Capvision's offices in Shanghai, Beijing, Suzhou and Shenzhen as part of a nationally coordinated campaign to clean up the consultancy industry. Is the latest in a series of clampdowns against consultancy groups in China. On today's Money Talk, we're joined by Asian fund management industry consultant Stewart Aldcroft and our US economics correspondent, writer and broadcaster Barry Wood. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street Monday, US stocks faltered as an early rally in regional banking shares ran out of steam. Shares for Los Angeles-based PacWest, which surged almost 82% on Friday, added another 30% on Monday morning after it said it will cut its quarterly dividend to just 1 cent per share from 25 cents per share in the prior quarter to preserve capital. However, it gave up much of the day's gains to close 3.6% higher, and since the start of the year, PacWest shares are down 74%. The KBW Regional Banking Index gave up an advance of 1.1% to end the day 2.8% weaker, at its lowest level since November 2020. In the broader market, ahead of consumer price inflation data tomorrow, the S&P 500 was little changed, with a small gain of under 0.1%, ending the session at 4,138. The Dow slipped 56 points, or 0.2%, to end at 33,619. The Nasdaq Composite added 0.2%, closing at 12,257. Hong Kong's Hang Seng Index climbed 248 points, or 1.2%, to 20,297. The Tech Index rose 0.5%. Mainland funds bought $1.6 billion worth of Hong Kong listed stocks through the Stock Connect scheme last week, and they bought another $1.8 billion on Monday. But the Hang Seng is down more than 10% since hitting a 2023 high on January the 27th. Today's futures markets are pointing to a decline for the Hang Seng of 80 points in the open. That's about 0.4%. On the mainland, the Shanghai Composite added 1.8% to 3,395. Ahead of trade and inflation data this week, Shares of Chinese banks rallied after at least 3 mid-sized nationwide lenders lowered deposit rates. China's Zhejiang Bank jumped over 6% in Hong Kong, and Bohai Bank rallied 3% after they cut interest rates on deposits by as much as 30 basis points. And shares of large state-owned lenders also soared. Bank of China surged by the 10% daily limit in Shanghai for the first time in almost 8 years, and CITIC Bank also rose 10%. The CSI 300 Financials Index added $166 billion in market value yesterday and reached the highest level since April 2022. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our guests. We have with us this morning, as we do every Tuesday morning, Asian fund management industry consultant Stewart Aldcroft. Morning, Stewart.
Good morning, Peter.
And also with us is our US economics correspondent and writer and broadcaster Barry Wood, who's over in Washington, D.C. Morning, Barry.
Good morning, Peter.
Barry, let me start with you, because this is going to be an important day, isn't it, for one of the two crises that are going on in the US at the moment, the debt ceiling issue. President Biden's going to meet with the big four congressional leaders today. Janet Yellen has warned of economic chaos if Congress doesn't raise the debt ceiling. What are the chances of something being thrashed out today, Barry, do you think?
Well, it won't happen today. I'm pretty sure of that. But the meeting itself is important, and that sets the stage for further meetings. Nobody wants a problem or a default. And in fact, I think it's really, in a sense, irresponsible to speak of a default. It's just not going to happen. But you've got the political divide with the Republicans saying you've got to cut some spending, and the Democrats saying, oh, no, we don't. We just want to have a deal. So this is in one sense, Peter, the beginning. So that's that. I think that we'll get through this. Let's not forget that the June 1st deadline mentioned by Treasury Secretary Yellen is a movable feast. That can change. That can slide to July 1. But at some point during the summer months here in North America, there's a crunch. So it's good that they're moving now.
Stuart?
It's an interesting situation, isn't it, though, because this seems to now becoming an annual event. It's happened under, I think, 2 or 3 presidencies. So it's not as if it's just a Biden issue. It's something that is just when the houses or the houses in the US are split as they are, and Democrats have the presidency, the Republicans have the Senate, they may sort of restrict the spending, or it's their attempt to restrict spending and an attempt to, in fact, force policy, which the president will undoubtedly resist. And so it's been an ongoing situation for many years. It just surprises me that the US government still hasn't managed to sort out a better way of dealing with it.
I agree. Look, listen, you've got a team of civil servants just below the ministerial level. We don't really have that here because the deputies are all likewise political appointees. So you don't get this cooperation in the same way you would in Britain or in continental Europe. And I think that it's in many ways an embarrassment that this is the way we do business. I don't think, Stewart, it's going to change.
Is it fair to say, although the Republicans are linking this to budget cuts, the debt ceiling isn't about future spending. It's about paying for money that has already been spent, has already been borrowed. A large portion of that, a large chunk of that was done under the Trump sort of presidency. So there's sort of, aren't they linking together two issues that aren't really sort of linked?
Yes, that's true. Certainly both parties are to blame for this problem. And of course, the underlying reality, the giant, is that we have chronic fiscal deficits. If we didn't have fiscal deficits, we wouldn't have this problem. But the United States goes from 5 to 10% of GDP as a deficit. trillion, more than $1 trillion in deficit. So that's the problem. Yes, some of it was allocated or at least authorized several years back. You know, as they like to say, Peter, something like 70% of the United States budget is in fact entitlements that can't be changed without congressional action. Mm-hmm. So this leaves very little for the Congress to do without getting into a huge fight about fundamental promises to the public.
But I think from an overseas perspective, looking at it as we do, it just seemed to me another way in which Republicans might snipe back at the president because they don't like his policies. They think they think there's a way in which they can restrict it or slow it down or do that sort of stuff. So I think that from an international perspective, yes, it doesn't look very good. It may be embarrassing for you being an American, but at the same time, it's politicking, and it's politicking at its extreme.
Is Janet Yellen right when she says if the unthinkable happens and the debt ceiling isn't raised, there's going to be economic chaos, financial chaos, a constitutional crisis, or is she overplaying it?
She's overplaying it. Yeah. You know, my friend Owen Ullman, who wrote a biography of Janet Yellen, had lunch with her 2 weeks ago. And she said that she'd be issuing such a statement, which was probably handed to her by people at the White House. Look, this is a political battle, as both of you have said. And this is the way it's played. Yes, there would be a real problem if it actually occurred, but we're a long way from having that happen.
Wasn't she just digging out words from a previous speech that she might have made years ago?
Probably.
They're all reusable, aren't they, those speeches?
Yeah, it's upcycling.
Okay, but let me ask you both about another potential problem in the US economy. The Fed's quarterly survey of senior loan officers, it showed US banks plan to raise their lending standards, which is adding to fears about a looming credit crunch. For loans to businesses, survey respondents reported tighter standards and weaker demand for all loan types. For loans to households, banks reported that lending standards tightened across all categories of residential real estate loans and weaker demand for home equity lines of credit. And standards tightened for all consumer loan categories and demand weakened for auto and other consumer loans, while it remained basically unchanged for credit cards. And yesterday, Chicago Fed President Austan Goolsbee said, "I'm certainly getting vibes, as you are in the market and in the business contacts, that the credit crunch, or at least a credit squeeze, is beginning." Now, Barry, this has been the fear, hasn't it, of the potential fallout from the banking crisis, that it's going to start filtering through to the real economy in the form of tighter lending standards, less credit. Are you also seeing signs that this is happening?
I'm not seeing signs here in Washington, but I haven't been looking for a mortgage. I know mortgage rates have gone up from 4% to about 7%, and they'll go higher still. This word credit squeeze is interesting. I think that we are seeing a credit squeeze, and this probably has to do with that notion of the lag time between an interest rate rise and when it takes effect. So we're going to see the effects of these higher interest rates. But I want to just mention, the first time I heard the word credit squeeze, I was 19 years old, and it was in Brisbane, Australia, on a Swedish ship. And this longshoreman, or wharfie they were called, came on board carrying his billy can. I said, "How are things?" He said, "We're having a credit squeeze." I had no idea what he meant. And I was shocked that he was speaking to me in these terms. But maybe that had some of the potential that led me into studying economics. But yeah, this is a credit squeeze in the making, and we're just beginning it.
One of the interesting things, I think, from this perspective is that the freedom to lend money and almost give it away by the US has definitely fueled the economy for the last 5 or so years. It's boosted the economy. It's allowed businesses to develop. It's allowed a lot of businesses to raise money on the stock exchanges, and particularly in the technology area, where where businesses quite obviously had relied on SVP and others to get money. If this is all being cut back, it inevitably is going to feed through to a reduction in the economy of the United States and quite possibly an additional period of potential recession, although that's a word that the US government seems to not want to use in respect of any aspect of its economy.
I think you're spot on, Stewart. That's exactly right, and it's going to slow the economy. I think the question is, does it slow the economy here in the second quarter, or do we have to wait for the third quarter? But we know this is happening.
Yeah, so it is something for us all to be a bit concerned about. And as I said before, when we've had this sort of discussion, I'm not convinced that interest rates have peaked yet in the US. I think there's possibly another couple of rate rises potentially before the end of this year, but it seems very unlikely without a sort of panic measure occurring for interest rate decreases anytime soon.
You're right.
If the economy is slowing and businesses are finding it harder to raise money, that should also start filtering through to employment, shouldn't it? They should be cutting back on hiring. But that didn't really show up in the jobs report, because we had a pretty stellar jobs report last week.
Not just pretty stellar, Peter, it was phenomenal. I mean, think of it. This is why we are in such a curious economy at the moment. How can you have a jobless rate of, 3.4%, the lowest since 1969? And you have jobs being created, 350,000 in the previous month? Mm-hmm. And yet we're talking recession.
Doesn't go together, does it?
It doesn't go together. And here we are in early May. The economy is still strong. Now it's distorted because of work from home and the factors that prevent some people from taking lower-end jobs that are going begging. There's signs, help wanted everywhere. So it's a curious phenomenon. I think it also amplifies Stewart's point that the Federal Reserve certainly is not going to cut rates soon, and they might raise one more time.
Yeah. One other aspect, I suppose we should also remember, and this is when we go back to this discussion about the banks and the fact that they've got to cut back. The reports now, I think last week it was 3,000. This week I've read it's now 5,000 different banks around the US, whether it be a one-branch bank to the JP Morgans and Citis of this world. But that's an awful lot of banks out there. And it seems to me that's a business model that can't be sustained for too much longer. But the question is really more about, do we think there will be another bank that is coming up to be likely to go bankrupt or likely to need to be supported or taken over? Will we know until it actually happens? Because they've been pretty good at burying that sort of news until the last minute.
The markets seem to think that it's not over, don't they? Although we had that rally on Friday in regional banks, it seems to have run out of steam pretty quickly. And the KBW Regional Banking Index is at its lowest level now since 2020. Also, the S&P 500 financials, it's on the verge of falling back below its 2007 peak, which investors sort of regard as being a key sort of level. This weakness in in regional banks, it really, Barry, doesn't seem to be abating, does it? We get maybe one day where things calm down a bit and then traders find another bank to go after.
Right. And as Warren Buffett and Charlie Munger pointed out over the weekend, they think that the regional banks will be hit by the commercial property problem, which is getting worse and hasn't really been reflected in any of the data yet. There's large vacancy rates in major cities, largely from the work from home, the aftermath of COVID, etc. And these loans, Stewart is right, there were all kinds of loans made at very low interest rates. Stewart, I would add just one word of amendment to what you're saying about those several hundred U.S. regional banks. The ones we're really worried about are probably the first 20 or 30. They're the really big ones that have, say, multiple states, Their assets are very large. They're in fact very big banks. You take, for example, PNC Bank in Pittsburgh, which bought up several banks here on the East Coast. They don't want to be called a regional bank because they say they're bigger than that. But they have lots of commercial real estate loans. I think that the problem is not over.
There's a very useful table if you're interested, if listeners are interested, in the Financial Times today, which covers, I think, about 50 of those banks that you're talking about, Barry, and talks about what their situation is, uninsured deposits, total deposits, that sort of thing. It's a hit list, probably.
Yeah, you're right.
Now, Stewart, here's something unusual occurring out here. I wouldn't have had on my Chinese equity market bingo card of sectors that people would suddenly pour into. Chinese banks. I mean, there was a rush into Chinese banks yesterday because some of these smaller ones cut their deposit rates, which is hardly good for their, when you're at the top of the interest rate cycle, it's not really a good time to be buying banks anyway. But what's going on there? This is very unusual, isn't it? Very odd.
Yeah, and don't ask me to try and explain it, Peter. I can't. It's the way in which markets move in China has become a little bit like the Japan of 30 or 40 years ago, where it was very rotational, and markets would move in accordance with the sort of themes of different fund managers. And you'd have one sector move, then another sector move, then another sector move, as each sort of group of fund managers all made a decision that they wanted to be in that sector, and they kept chasing each other. And I suspect that that's probably what's going on at the moment with Chinese banks, because as we know, Chinese banks have got probably as big a problem as many of the US banks insofar as they've been lending very heavily to property, and property is not a good place to be lending money in China as it is in the US, and so, or I should say, as it isn't as well in the US. But what we do know is that there is a lot of money and support within the Chinese financial industry, and as it is more or less 99.5% invested into mainland Chinese stocks, it needs to find places and outlets within that sector, whichever sector they think is next going to go well.
I think investors are also betting that Beijing is going to let state-owned firms, state-owned banks, or state-owned firms have access to more capital, and therefore banks are going to play a bigger role in the economy. But if I was an investor, I'd be rather worried about that, the thought of Chinese banks making even more bad loans and lending to firms that they shouldn't be lending to. It's not really a good route for profitability, is it?
No, that's right. And they haven't really sorted out all their bad loan situation anyway up until now. So it is more good money going after bad, and well, we all know what that can lead to, but that doesn't lead to things in China in the same way as it does in other parts of the world, because the state-owned banks are so dominant and the state will support them in the end.
But in the meantime, banks are the latest sector that's in China that investors seem to be interested in. Barry, let me ask you about Warren Buffett. You mentioned him a bit earlier. He had his annual shareholders meeting, which I think is a bit of a jamboree, isn't it, in Omaha? It's one sort of regarded as one of the events of the year. Berkshire Hathaway, how much is that a bellwether for the US economy overall? Because it seems to have its tentacles into so many different businesses and parts of the US economy. I presume that in some ways it's a good measure of what's going on overall in the US.
Yes. What is it? Fourth, fifth biggest United States company by market cap. And, it owns the Burlington Northern Santa Fe Railway. That's the number one or number two railway in the United States, west of Chicago. They own Dairy Queen, they own Candy Store, they own lots of things, and they're huge holders of Apple and huge holders in Coca-Cola. But Warren has stayed away from the banks. And by the way, very big in Chinese companies, not in terms of investments, but in terms of their enthusiasm. For
Japanese
example,
companies. BYD.
Yeah. And so, look, I've been either in Omaha 8 times or participating a dozen times in these Warren Buffett, Charlie Munger jamborees, as you say. And I think that's a fair term. But let's not forget what I think is the most bottom line reality. These men, 92 and a half years old and 99 years old, are mentally sharp. They take questions that they don't have a knowledge of in advance for 5 straight hours, 1 hour break for lunch. It's extraordinary. And the people who show up in Omaha, right in the middle of the United States, they've come there to learn. And they tend to be young people, many from China, who've come all the way across the Pacific now, or they're studying in the American universities. They come, farmers come, ranchers, businessmen from Europe, big time. They're all there to learn. And so far, they're learning. And what does Warren have, Warren and Charlie? They talk every day on the phone. They have $138 billion in spare cash, which they keep in treasury bills. It's an extraordinary phenomenon.
It's a fascinating business, really. You've described it really very nicely, Barry. There, the interesting thing is, as you say, they have an interest in China. Actually, last night it was announced that they'd sold down their holdings in BYD to just 9% or 9.9%. So they've come back from a higher holding. They're now talking about Japan as being a place where they think they can put more money, taking it out of places like Taiwan. But they are an investor in the Asian region, probably because they can see opportunity in this region in a way that many other U.S. corporations just don't seem to do. And that's a message that people in Asia would love to see taken a little bit further, because we feel that the US is currently ignoring much of our region for political reasons rather than for business reasons.
Excellent point. And don't forget that Warren was in Japan just a month ago.
Yeah.
So we should take...
You also make a very valid point. I mean, 92, 99. I mean, there's hope for us all, really, isn't there?
That's true.
So I suppose even at 99 years old, we should take note then of what they say and what they said on the American economy. They were rather gloomy, weren't they?
Yeah, but a lot of people are getting a bit bothered. I mean, the reality is that they're not going to live forever, and what happens with either of these two pass on, will the business continue as it has done? And the fact is that the what appears to be the nominated successor, Greg Abel, is a very low-profile person who is only just beginning to show himself above the parapet. And I think they need to probably put a bit more effort into that if they really think that this is the one who will succeed either of them.
Yeah, I think that's all planned. And indeed, Abel sat on the podium with the two senior people. And so did the Indian-American Ajit, who runs the insurance business. So the succession, I think, is pretty much in order, Stewart. But, yeah, gloomy about the United States, that would be a little too strong, Peter, but certainly less optimistic. They don't like the short-term policies of so many investors. Charlie Munger said, too many people are money managers. We need fewer money managers. They don't like the kind of credit that is with zero collateral offered, and that's changing. And, Warren likes to say that you've won the ovarian lottery if you're born in the States. He said it again, but he also said you cannot keep spending money indefinitely. And so, yeah, I take... And he also said politics have become tribal in the States, and that leads to problems. So, yeah, I agree with you, Peter. I think they were sober. They were less optimistic about the future of the U.S.
He was saying the incredible period for the U.S. economy has been coming to an end, which is going to make it harder for value investors like themselves who buy stocks that look cheap compared to the intrinsic value of the businesses. Charlie Munger said, get used to making less.
Yes.
What do you make, Stewart, about his preference for Japan? In fact, his preference for Japan over Taiwan. I mean, they were basically saying they've sold out now of Taiwan semiconductor manufacturing, which was a big holding of theirs, not because they don't like the company or the management. They think it's a fantastic company. They just think it's in the wrong place and caught in the middle of all the geopolitical tensions. But they do seem to like Japan.
Well, they like Japan, yes, but many people have liked Japan for a long time because the Japanese market is famous for not having recovered to its previous high points and is struggling. But Japan does seem to be at a better position these days than it used to be, and I think that there are opportunities there as their objective ultimately is to buy into companies that will increase in value and will enhance and improve the overall returns of Berkshire Hathaway. But when you're the size that they are, you need to be buying into big companies. And Japan does have big companies, whereas Taiwan has lots and lots of much smaller companies. And that's probably one of the major reasons why that they're pulling out. Although SCMP is still a very Taiwan Semiconductor Manufacturing, TSMC, is still a major company in Taiwan and one of their biggest. But there are lots and lots of very small companies in Taiwan, which are probably beyond the ability of Berkshire Hathaway to be buying at this moment. That would certainly they would not be making any significant difference to the overall returns of that business.
Well, thank you both very much. Talked about a lot there. Look forward to doing the same thing next week. That's Stewart Aldcroft, Asia Fund Management Industry Consultant, and also Barry Wood, our US Economics Correspondent over in Washington, D.C. Thank you for listening this morning. Just a reminder to take a look at the show's website, peterlewismoneytalk.substack.com. There you'll find more information on today's business and finance stories in my daily newsletter, along with details of how to find the show on iTunes, Spotify, and Google Podcasts. And I get to do it all again tomorrow when my guests will be wealth preservation specialist Enzio von Pfahl and Mark Michelson, chairman of the Asia CEO Forum at IMA Asia. And with a view from Japan is John Byrne, vice chair of research at the Asian Development Bank Institute. See you tomorrow.
Money Talk